Beyond Meat, of the company that still somehow is alive. Nobody really knows how. They make meat that's not meat, basically. They grow it in a lab. They've been rocking and rolling recently. So this is a company that was destined to go bankrupt. I think still fundamentally probably is destined to go bankrupt. Their product is not good. Anecdotally, I have eaten their product. It's not very good, I don't think. Some may disagree. I think the people that disagree are probably shareholders that really want it to taste good and really want to return on their money. So these guys have been in the news recently for very funny reasons. First of all, let's make something very clear here. This is the chart of their company. They went public in 2019, in May of 2019. They were a $4 billion company when they went public. Today, they're worth $500 million. This is a horrific fall from grace. Beyond Meat had some stuff happen. Specifically, they got added to an ETF that is maintained by a company called Roundhill. They maintain ETFs, which are basically baskets of stocks for those that don't know. They maintain an ETF, and they added Beyond Meat into their meme stock ETF. Why? I don't know, but they did. And then as a result of a partnership with Walmart, Beyond Meat went from 53 cents a share to $3.51. I believe its peak price was $7.48 on October 21st. This is all meme stuff, by the way. This is very stupid. A company going up 600% in a day is very dumb and a sign of just like general market stupidity, because nothing fundamentally about the company had changed at that point. They had just said, hey, we're basically expanding with Walmart. However, again, there was no reason for this company to go up that fast. What is so interesting about this is this happens all the time, right? This is happening all over the market. We see this literally all over the place. There are companies left and right going up 300, 400% in a day. We just saw a little while ago with MP Materials. We just saw them rise, 130, 200% because the federal government decided that they wanted to take a stake in the company. AREC, a little while ago, they basically, they're up 100%, 200, 300, 400%. There's tons of examples of this all over the market of market being stupid. The market will always be stupid. But what's most interesting about Beyond Meat is they are actually using this to change things around. The big thing that was talked about was this. Because of the hype of the company, their board decided that they would go to their shareholders. These are people that own either the security outright or they own bonds from the company. And they said, hey, would you mind if we exchanged your high yield bonds? Let's say they were paying like 6, 7, 8% on these bonds because they're a terrible company, 6, 7, 8% on these bonds. And would you mind if we sold you new bonds at like a 2 or 3 or 4% interest rate? And so I think it was like 47%. Yeah, 47% of their supporting shareholders said sure. And then they're obviously waiting for the rest of their shareholders to take them up on this offer. But they said, sure, we'll take new bonds at lower interest rates so that you can use the difference that you would have paid and take that money off of debt off of the balance sheet. Now, this is very good. This is a sign of very good financial management. The company is going to their investors and they're saying, hey, would you mind us paying you a little less over time if it means that we can actually survive? And if you're a bondholder in this company and you've been watching them fall, you're going to jump at this chance, because it's like, if a company is going to say, hey, we're going to get rid of debt, okay, that might buy you a few more years and you might actually get paid the bonds instead of, oh, the company folds and, well, then you don't get paid anything. Or then you have to go through the whole litigation process of getting your money back or whatever. But anyway, so of course, a lot of the bondholders are going to jump at this and be like, yes, absolutely, we'll take the lower interest rates as long as it means that you get to survive for a little bit longer. And it caused the stock to rally again a little while later. But like I said, to go back to the fundamental operations of the company, this is not a good company. The revenue declined by $20 million from last year in the last quarter, and by, I think, like almost 30 million over the year. Also, their cost of goods sold is also going down, but like, well, who cares, whatever. They're unprofitable. This company has never made a profit. So for the entirety of their existence, which I think they've been around for 15 years, they have never been able to sell enough to cover their expenses, which if you don't know anything about finance, I think we can all agree that if you are taking on more debt every year, it's typically a bad thing. you typically don't survive very long in an environment where all you do is lose money. And that's all this company has done. Now, another piece of news that Beyond Meat. So for those of you who may not be familiar, GameStop happened, and it was very stupid as well. In 2021, big deal, GameStop. Basically what happened was there were a bunch of companies that were shorting it because they said, this company is probably going out of business. And to be fair, they probably were. Unless something changed severely, there were a couple of investors that were like, hey, actually, we think GameStop is a pretty good company, so let's buy a ton of shares and cause what's called a short squeeze. A short squeeze, basically, people shorting the company. If it goes above a certain price, they have to go out and buy shares in the open market. Buying shares, all of a sudden, price goes up, price goes up, price goes up forever. Basically, the same thing happened with Beyond Meat. People were shorting this company for very good reasons. It's a terrible company. Beyond Meat was probably destined to go bankrupt. They were in a ton of debt. Their sales were declining. They did not have good distribution channels, just in general. Not great. And so what happens is a bunch of investors are like, actually, I kind of like this company. And so Roundhill also recognizes this and says, hey, you know what? This is a stupid company that people just like, so let's add it to our ETF. And then all of a sudden there are a ton of investors and you get another short squeeze just like GameStop. And what is ultimately very funny is one of the big reasons for the short squeeze was because Beyond Meat was a couple of days away from reporting earnings. And so every 3 months, obviously, a company reports earnings for their last 3 months. They were originally scheduled to report their earnings on November 4th. And so a lot of people sort of coalesced around the company saying, hey, you know, maybe this earnings will be really good. And what's very funny is they've rescheduled their earnings to November 11th. And as a result, the company has fallen 15% today. From a high of like $1.60 to like $1.41, which is a certified classic, I think, for Beyond Meat. The shareholders are obviously in shambles. I find great enjoyment in this. Market stupidity is one of my favorite things to watch.